Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, stock markets, when we talk about yesterday's trade, they definitely closed higher for the third straight day, led by gains in the PSU banks, the oil and gas stocks and select stocks in the auto space as well. A lot of counters like M&M, Power Grid, HDFC Bank, SBI, Bank of Baroda led the show in yesterday's trade. And the Nifty now has 21,900 by its side and has set its eyes on 22,000 and its all-time highs again. Will the Nifty be able to touch newer highs is the big question. We will tell you all of it, but first up, the top headlines we're tracking for you this hour. Indian bulls are looking to improve their tally on Friday as buying momentum over the past 3 days tries to push the Nifty beyond 22,000 point level. SBI, Auto, Software and RIL helped the Nifty on its way up. Global markets are in a fine shape. Dow, S&P 500 at record highs. Japan's Nikkei is all set to clear its highest level since 1989. Traveling to a fresh peak in 34 years, equities give the best returns among asset classes over time. Very good morning to all our viewers joining in, and good morning to you, Shail, as well. Well, despite all that volatility that we've been encountering on the markets for the last few trading sessions, it was eventually a day when the markets closed above the resistance level of 21,850 on the Nifty on the back of PSUs, which have resumed their rally after a small gap as well. And therefore, it also extended its third consecutive day of winning trade on the markets. Where do you see the Nifty headed? Is a new high in the offing, Shail?
Good morning, Sakshi, and a very warm welcome to thousands of viewers who are joining us on Market Today this wonderful morning. As you know, Sakshi, the temperature is now getting warmer in Delhi now that the cold winter is behind us, and something similar is happening on Dalal Street as well. We'll spend some bit of time on the Nifty today. There are some interesting data that I'd like to share. And as usual, we'll start with the daily chart, which is in front of you. As far as the Nifty is concerned, we all know that the index ended 70 points higher at about 21,910 yesterday. The point, Sakshi, is very simple. And first, I'll give you where it is headed, and then we'll give the reason. Because, you know, people want to know कि करना क्या है, क्यों करना है, वो बात की बात है. तो करना क्या है, वो ये है कि we are headed for better days, definitely 22,000. If you look at how the GIFT Nifty is giving us signs, that's towards the positivity of the market. But beyond this, Sakshi, there are zones that are opening up, and probably somewhere in late February we'll be at a fresh record high, if not earlier. Now let's get back to our Nifty chart. And the most interesting thing is that, of course, we are closing, in the green for the last 3 days. But the volatility is what is, being purchased. If you look at yesterday's low, it was 21,800. The index ended at 910. So the drop was bought. Look at the low on the previous session. And I am talking about now Wednesday. Wednesday's low was 21,530 on the index, and we closed at 21,840. So look at this, a 300 point dip was purchased and the index closed substantially higher. Now let's come to Tuesday. The low was again 21,543, and the index closed at 21,743. So again it rose 200 points from the day's low, and this is when, Sakshi, the heaviest weighted stock in the Nifty and the Bank Nifty, HDFC Bank, forget performing on the long side. It is actually slipping lower. So this shows that the market is now looking at stocks beyond HDFC Bank to move higher. Let HDFC Bank remain where it is, let it slip another 10 rupees lower, 15 rupees lower, let the FII number be negative. But the point is that the Nifty is now headed higher. We have seen an all-time high of 21,124 on 16th of January. How soon that will come is, how should I say, in front of us. And Sakshi, there are interesting developments on the Nifty option chain.
Okay.
If you look at the Nifty option chain, now a lot of strength is being built up at levels of 21,900, which is in the money. So a lot of very strong put writing is happening on 21,900, which essentially means that the bulls are creating strong fundamental strength on this level. So excessive put writing on 21,900, on 21,800 and on 21,700, which basically means that the lower levels are getting strengthened by the bulls by buying this dip that has happened over the last 3 days. Therefore, from now on, we expect the Nifty will hit record highs and will hit higher zones. You remember yesterday I had talked about 22,300 in our conversation. So probably that is on the horizon. How soon that will come? It's a matter of time, but maybe somewhere towards the fag end of February, you'll see a record high on the Nifty and then substantially higher numbers. The results are now out. It is RIL, it is State Bank of India, it is the interest cut theme that is playing across autos. You remember M&M, remember Bajaj Auto, remember Maruti. Earlier, Sakshi, only Bajaj Auto and Tata Motors were hitting record highs. Now Maruti has joined the rally, TVS Motors has joined the rally, Mahindra & Mahindra has joined the rally. So newer and better stocks are coming to help the Nifty higher. HDFC Bank में अगर कुछ नहीं होना, कोई बात.
Okay, but even yesterday, I mean, like 2% uptick. So I'm sure HDFC Bank will also start to, want to save the blushes and want to move higher along with the others as well. Let's talk about the Nifty Bank then, Shail. The bulls over here also maintain their strong dominance. And of course, the index closed above 46,000 mark, and this is for the first time since February 1st as well. And now that we're talking about HDFC Bank also coming back in flavor, do you think, of course, we will see higher highs coming in on the Nifty Bank as well?
Okay, Sakshi. We'll start with the most obvious thing. This is the Nifty Bank daily chart with you. And over the last 1 week or so, both Sakshi and I have been harping on the fact that it's at 200 DMA, and this is showing strength. So from 25th of January, Sakshi, the 200 DMA has been tested 1, 2, 3 times by the index, and it's hovering around that. So it hits the 200 DMA, bounces up sharply, and then flattens out. So now what has happened, Sakshi, all of yesterday, is that the Bank Nifty has closed above all its short-term moving averages, whether it is 9-day moving average, 20-day moving average, 34-day moving average. All of them are now supporting the Bank Nifty. And this support is mainly because of the rally that we have seen in stocks such as State Bank of India, stocks such as Canara Bank. So the public sector banks, even though their weightage in the index is fairly low, the rally there is offsetting the sideways and the weak trend in private sector banks. There is nothing wrong with HDFC Bank, please bear in mind. It's just that the over ownership of HDFC Bank, Sakshi, is so much that it's in every portfolio, and that's the reason why the stock is not moving. See the FII number yesterday. The number of the net sale of FII yesterday was 3,064 crores on February 15th. On February 14th, it is 2628 crores. Now they are the largest holder of HDFC Bank stock, and when they need money, that is where they press the sales. This is the lowest impact cost, साक्षी. आपको इतना पैसा अगर चाहिए तो HDFC बैंक में से ही निकल सकता है without bothering about the sharp drop in price. It will not happen because it's a very liquid counter, and because of the quality of the bank, the quality of the balance sheet, and the long-term outperformance that HDFC Bank is concerned, people buy this. So FIs are selling and local retailers are buying into HDFC Bank. That's what's happening. Bank Nifty is also good times ahead. 46,000 is where it shut shop. 46,218, 310 points higher. You'll see better numbers on this one. Let's wait for 47,000.
Let's wait for 47,000. In the F&O space, Shail, any particular stocks going to be in action today?
Sakshi, I think we'll have to look at oil marketing companies and oil explorers. What has happened is that the government has increased their windfall tax. I'm very keen on Oil India and ONGC. Any dip on this one will be purchased, Sakshi. These two I'm watching.
Okay. Oil India and ONGC, we will keep an eye out on this amidst the windfall taxes on crude oil that have been hiked by the government. Let's look at the global cues then. Of course, a new closing high for the US equities yet again. We've seen the S&P 500 jump about 0.5% in trade, the Nasdaq up by about 0.3% in trade, the Dow at a new all-time high as well. And US stocks, closed higher consecutively because the retail sales data this time around, that declined more than expected. And this fed hopes that the Federal Reserve will now, soon start to cut rates in the coming months as well. And therefore, you see a huge uptick coming in on all the three benchmarks on the Wall Street as well. Following this, we've actually seen the Asian markets also trading higher in the early trade, with the Nikkei at a fresh 34-year high and up very, very sharply, about 1.2% up in trades. The Kospi also was up. Slightly now lower in trade, but it's the Hang Seng and Shanghai that also aided the sentiments all across. When we talk about the GIFT Nifty, it indicates that the benchmark indices back home here in India are likely to open positive with a gain of about 62 odd points is what the GIFT Nifty is indicating. Now, as far as the flows are concerned, the foreign investors meanwhile were net sellers despite the run-up that we saw in the markets yesterday, or a sharp recovery. 3,064 odd crore rupees of shares is what they sold in the cash market, while the domestic investors were net buyers. They bought 2,276 crores worth of equities in trade yesterday. Now, as far as some of the stocks are concerned, let's keep an eye out on Axis Bank, which came out with a clarification on the plea that's been filed by senior BJP leader Subramaniam Swamy in the Delhi High Court. The lender said that it has obtained all necessary regulatory approvals for the transactions related to the sale or purchase of the shares of Max Life Insurance. That's the important clarification coming in from Axis Bank. Dilip Buildcon, that will be in focus. The infra company through a JV has declared as an L1 bidder for the tender that was floated by Madhya Pradesh's Water Resources Department. The project cost is 412 odd crores, and UPL is also going to be in focus here. There is a slight negative news. Global rating agency Fitch Ratings has downgraded UPL's corporation's long-term issuer default rating to BB plus from BBB minus, citing weak 9 months FY24 EBITDA. So that's a bit of a concern. Escorts Kubota is going to be in focus. The tractor maker has now executed long-term wage settlement agreement with the workers' union for 3 years. That's going to be in focus. The aviation stocks, they could be in focus, both Indigo and SpiceJet, because the airline with the largest market share, Indigo, has seen a slight dip at 60.2% in January from 61.8% in the previous month. So we'll keep an eye out on the entire aviation space again. Entero Healthcare, that's the new debut that you should be keeping a watch over today. The healthcare products distributor is set to debut today, and the final issue price was fixed at 1258 rupees per share, and we will continue to watch over that too. Let's now welcome our guest on the show. I think Kiran Jani is here with us, Head of Technical Research at Jainam Broking. Kiran, very good morning to you and good to have you with us. The market's looking brighter than what it was in a few days ago. How are you looking at the trading setup as of now, and where exactly would your focus be in trade today?
it is picking up. Market has made a significant slow, but we are seeing since last 2 days, market is getting again height of high bottom pattern on intraday charts at least. Now coming to the data, let's bifurcate those data what you have shared just now. On cash market, we are seeing that FIIs continues selling since last 2 days. Yesterday also we have seen 3,000 crores selling data from FIIs. Now coming to the derivative data, we are seeing a very mixed kind of open interest data from the FIIs. If I am talking about the index future, we have seen on long side and short side, both side, open interest has been reduced by the FII. So open interest is cutting down and prices going up. It's clear cut. We are seeing the short serving rallies coming on. Next point I want to add on the option side, like FIIs is keep adding open interest on call short. However, Shailji has clearly indicated that in the money or at the money options from put side, options writers are getting stronger and stronger. But on FII front, if we check the data, on call side, we are seeing 3,61,000 contracts been written down by the FIIs. And on put side, it is only 1,39,000. So call writers are very much aggressive at higher level. So we keep eyes on, or we have to be cautious at level of 21,900 to 22,000. Until and unless Nifty is closing above 22,000, we can see some more short covering rally. Otherwise, we have to be a little bit cautious. Coming to the again options data, Nifty PCI ratio is somewhere around 1.03, whereas Bank Nifty PCI ratio is 1.17. So we can see some catch-up rally on Bank Nifty as we are seeing because of the HDFC Bank. Bank Nifty is underperforming to the Nifty. However, now we are seeing some catch-up rally should come on Bank Nifty. So level-wise, if we speak for Nifty, the Nifty has a resistance of 21,900 to 22,000. So we are recommending fresh long about 22,000 only. But if any risky trader wants to take the bet somewhere around, if any gap of openings somewhere around 21,900 to 20,950, one can go short. And if anyone wants to go long, either let's wait for market to cross 22,000 or wait for 21,700 dip. And we would like to go buy on dip level only, not at current market price. Similarly, Bank Nifty has a resistance of 46,300, 46,200. If Bank Nifty is not able to cross those levels, then again we can see some dip somewhere around 45,500, 45,300. So that could be the level where we can fresh enter into the long side. Otherwise, at current market price, we are not seeing a good risk reward ratio for the long side. Coming to the stock specific, we are coming with the two fresh long ideas. One from the cement sector, it is JK Lakshmi Cement. If you check the daily chart, we are seeing ascending triangle pattern breakout since last 2 days. JK Lakshmi Cement is fairly sustaining its resistance level of 900, 910. So we are looking some good upside is coming on JK Lakshmi Cement. So one can go long JK Lakshmi Cement at current market price. The price target of 940 with the stop loss of 889. Next is the from the healthcare, it's Metropolis. Again here we are seeing a fresh breakout on daily chart. There are multiple bullish candlesticks pattern we are seeing at the moving average support, and the momentum indicator is also trading into the bullish zone. So Metropolis is next call where we would like to go long at 1700. Our target is 1740, and we would like to keep a stop loss of 1689. So on index side, we are a little bit cautious, but stock specific movement, we are expecting market to perform very well. So JK Lakshmi Cement and Metropolis both are our buy calls.
Okay. So those are the two stock ideas, JK Lakshmi Cement, Metropolis Healthcare, where Kiran is positive on. We'll continue to track this as well. Meanwhile, we are also joined by Mayuresh Joshi now, Head of Equity Research at William O'Neill India. Very good morning to you, Mayuresh, and good to have you with us on Business Today Television. Just like I was saying to Kiran also before that, you know, the markets are looking better and we are again setting our eyes on all-time highs yet again. But it's the PSU stocks that are taking our breath away again. Would you be focused on that space itself, or would you be looking at some other stocks today?
Morning, Sakshi. Morning, Shail sir. Morning, Kiran. So the markets are in exuberance mode. So the momentum continues for Indian markets, and the rally continues unabated. So to that extent, I think PSU stocks back in limelight, back in flavor. Obviously, the concerns in terms of soft numbers for a whole host of PSU companies. I think you saw knee-jerk reactions on them. But I think the market is of the belief that PSU's order books, the expectation in terms of their execution timelines, specifically for the non-banking PSUs, should be relatively better. And even for the banking-related PSU stocks, the expectations in terms of a very strong balance sheet as we speak, better access to deposit mobilization, and therefore, in the scenario of a rate cut at the second half of this calendar year, the benefit in terms of a large part of their loans still linked to MCLR gives an immediate benefit in terms of NIMs and spreads, along with accelerated provisioning that has already happened on their balance sheet and an improvement in earnings trajectory based on recoveries and upgrades and a better loan mix as we head into the next few quarters as well. So yeah, I think the flavor probably continues with PSUs, but we remain selective here within PSU banks. A lot of banks have probably moved up quite significantly. Even the largest one, SBI, has started moving over the last few days post results. And therefore, within this pack, risk reward PSU banks still offer a better risk reward in our perspective. So yeah, I think the momentum can continue, but from a risk reward, PSU banks.
A very good morning to you, Mayuresh ji, and an equally warm welcome to Kiran ji. It's a pleasure to host both of you gentlemen on Market Today. Mayuresh, we'll start with you first. And before we start, I'd like to present Mayuresh's report card, my little book. I note down everything what every analyst says. So we'll show the chart of Parag milk, ladies and gentlemen. Mayuresh was with us on 5th of January, and he mentioned this stock at about 218 rupees. Let's look at the price of Parag milk now. Not only have milk prices gone up, but so has the cost of Parag milk stock. 260 for you, 262 for you. As also we look at Bank of India, 118. Of course, Mayuresh has joined us after 5th of January as well. So Bank of India was suggested at 118. It went all the way up to 154, and then now at about 142. So with this wonderful track record, Mayuresh, behind us, I know your life becomes more difficult. What are the two stocks that you're looking at?
Thank God for the report card, Shail sir. I think I hope I've passed the test. So in that extent, I think our take is now be a little bit more selective with the broader markets and have a watch list created of the larger cap stocks. So in the larger cap names, Maruti Suzuki is something that we are keeping onto our buy watch list. As is Mahindra and Mahindra. I think fabulous set of numbers by Mahindra and Mahindra. So I think both these two auto giants within the large cap names are probably well placed in our opinion. The expectations in terms of the order backlog, M&M, in the case of M&M, 226,000 odd units, they're getting order inflow of almost 50,000 units per month, and they've expanded their capacities to almost 49,000 units per month. So on the passenger side of the business, the business is expected to continue doing well, specifically in terms of gaining market share as far as the SUV market is concerned. And even on the farm equipment part of the business, similar to what Escort's commentary was, because of deficient monsoons, irregular rains, this year was a little bit of a blemish for both these companies. But going forward, with the expectations of a normalized monsoon, the kind of launches that they are doing, 3 more launches under the 30 horsepower category, that's very, very critical, because if you look at the land holdings of India, more than 85-90% of land holdings are less than a hectare. And therefore, anything less than 50 horsepower is something that works in the Indian context, unlike the European and the American context. So I think these launches should also help out M&M as far as the recovery in the farm equipment is concerned. And similarly for Maruti, I think more launches expected within their segment. They are expecting a large part of market share gains to probably take place. The distribution network is very, very robust. The average selling price per car on a blended basis, because of the product mix, has moved significantly higher. The order backlog is equally good. They have taken price hikes for input cost increases. And again, in the scenario of rate sensitives, as rates will head lower at the end of this year, at some point at the end of this year, I think a lot of buyers will probably come through to take advantage in terms of lower interest rate scenario for ownership of high-end cars as well. And therefore, I think autos as a space, auto ancillary as a space looks very, very attractive. Both these giants probably are looking attractive where we are placed in the market at this stage.
Okay.
Okay. So the interest cut rate theme is something which Mayuresh is also betting on. What we'll do is we'll take a very, very quick break, and on the other side, our pre-open trades. We'll be back shortly.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back, ladies and gentlemen. You are with Market Today, and we are looking at pre-open trades as far as today's market is concerned. I'm so delighted to share the opening quote on the Nifty. It's going in sync with what we had talked about. 22,039, ladies and gentlemen, 127 points higher. Let's look at the counters that are behind this fantastic opening on the Friday morning. Infosys, 2% higher, 1710. TCS 1.6% higher, 4178. Let's look at the other two index heavyweights. Flat on Reliance, no quote so far, 2941. There isn't a tick on SBI as well. Let's look at what HDFC Bank is trying to do. 0.5% higher, 1420. We'll wait for these prices to settle. Lever is opening 1.6% higher, 2385. No stopping Tata Motors, 1% higher. Let's very quickly look at what the other F&O stocks are doing beyond the index heavyweights. Just a moment ago, Mayuresh had mentioned Escorts. Now 3% higher, 2990. What else is clicking? BPCL 2% higher, 668. Bajaj Auto, no let up in the rally, fresh record high, 1.7% higher, 8255. M&M, Sakshi, 1800. 2% higher, fresh record high. In the PSU pack, you have Coal India and NTPC, 1.7% higher. Let's look at the losers. Nothing much to talk about. Let's look at NSE 500. We have a wonderful panel today. We'll go back to them very quickly. Sakshi, no stopping Paytm, 4% lower, 312. Let's look at the top gainers. Okay, Rain Industries, 9% higher, 197. NBCC 5% higher. MMTC 5% higher, Medant 2.9% higher, 1429. Let's get Kiranji into the conversation. So you mentioned JK Lakshmi Cement as one of your picks. Given the pre-open and how SBI is moving, would you have an outlook on State Bank of India?
So coming to the SBI, we have already seen a superior rally on SBI. Last 3 days we have seen consolidation, and yesterday we have seen the burst out from that consolidation, and stock price is trading somewhere around 760. Today also we are expecting prices to go keep a higher level only. Say for example, if market is, SBI is not breaking the level of 750, 740, then we are expecting prices to touch this dream level of 800 definitely. So any tips towards 760, 750 would like to go long, keep a strict stop loss of 740 and for the target of 8.
Okay. All right, Mayuresh, how would you look at HDFC Bank in the pre-opening trade? It's opening at 14:45 now. Do you think finally it's getting its mojo back, or is it just volatility?
So I think $1 million question here. But largely, I think the price damage on HDFC Bank is largely done with, in my opinion. Now it will largely oscillate in a very broad range. And obviously, the markets want to have a look at the next quarter numbers. How are the numbers expected to shape up? Are they seeing some amount of decent recovery in terms of the core parameters that the bank is expected to go through? And obviously, going by the con call in the previous quarter's numbers, the bank has very clearly mandated and stated they are not going to chase growth for the heck of it. So, in my opinion, I think it's going to be still a very stable-ish sort of a quarter that comes through even for Q4. And therefore, I think a broad range is how I look at HDFC Bank. But at some point of time, Sakshi, in the next financial year, as operating leverage with revenue and cost synergies starting to play out, with the rate cut again coming into focus, I think a lot of synergies will get played out, and valuations are now looking far, far attractive than what they were. If there is price strength as we see it in markets with India over the next few weeks and months, I think the worst will probably get priced in, and therefore I think there will be opportunities for HDFC Bank to get into HDFC Bank over the next few weeks and months.
Okay, Kiran, technically, would you want to come in on HDFC Bank and tell us where is the price headed?
So overall, if you check HDFC Bank chart or even a private bank index chart, both are developing a bullish hidden divergence at current level. So definitely, as a technical analysis, based on technical analysis, we would like to go long on HDFC Bank. Definitely, reason being of this hidden bullish divergence. Apart from that, if you check monthly and weekly chart, we are seeing a long-term support is also somewhere around 1400 to 1350. So definitely, we would like to go along at current market price. A risk reward ratio is very much favorable. Keep a strict stop loss of 1350. And if you are okay to give at least 3 to 4 months, then we can expect price rise somewhere around 1550 to 1600, which are the price gap on daily chart. So definitely at any dip or at even a current market price, we would like to go long on HDFC with a stop loss of 350.
Okay, so that's HDFC Bank for you.
Okay,
And what
let's look at some
Yes,
other
Shail.
prices, Sakshi. Please go ahead. No issues.
On the OMCs and the entire oil and gas space, Mayuresh, I wanted to ask you, how are you looking at the fresh momentum that's built up? I mean, all the three OMCs were soaring higher like never before yesterday, a very, very sharp run. And especially when we talk about the upstream makers, I mean, 11% surge on, stocks like Oil India. How would you really look at this entire space now? Jeffries has also upgraded, some of these stocks from the OMCs right now. And of course, with the new fresh government, indication coming in on the windfall tax on crude, how would you look at this entire space?
So I think there's a marginal increase in windfall tax as we see it, and therefore no substantial change in earnings estimates that analysts will peg out for these companies. For OMCs, Sakshi, I think the risks and the rewards. First to the rewards part, the expectations in terms of stable earnings growth expected to continue because Singapore GRMs now are looking far more stable from the volatility phase that we witnessed a few quarters back, and therefore Singapore GRMs are in fine territory as we speak. A lot of recovery has happened in a lot of product cracks, and therefore stability in Singapore GRMs is what will keep the refining margins stable. The second aspect in terms of crude pricing itself, a large part of the market believes crude to be somewhere in the range of 70, 75 to around 85, 90 odd dollars. And that is where it will settle for most part of this financial year. And therefore, I think a large element in terms of a lot of volatility as it comes to crude prices is ruled out, which means, again, the pipeline business that OMCs have got, there should be a stable kind of a transmission revenue that they will generate. Last but not the least, the downstream products that they produce, the petchem part of their business, along with stability in crude prices, should also have stability in terms of end product prices as well. And their investments that they probably have on their balance sheet are soaring because of soaring markets and the dividend yield that they've got. So a lot of reward factors that they've got. The risk factor, which was very, very pertinent, was before elections, if crude spikes, is there going to be a substantial cut as far as the elections are concerned? It doesn't seem to be the scenario at this point of time, and therefore I think all dynamics are moving in favor of OMCs. For upstream, the expectations in terms of stable crude pricing, as we discussed right now, creates a lot of visibility as far as production numbers are concerned. And therefore, with improving production numbers, you've seen that in the case of Oil India as an example in Q3, or ONGC as well. The large part of the market believes with stable production numbers and an increasing one by every passing quarter and stable pricing environment, you'll probably see a lot of operating leverage playing out on their balance sheets. And again, I think the kind of expectation that one has in terms of a calibrated capex, that should also keep cash flow steady. So I think a lot of moving parts for both upstream and downstream companies.
Okay. Mayuresh, you've gone through with the third quarter results with a fine tooth comb and a magnifying lens. Tell us two or three stocks where you think earnings were much, much ahead of expectations and one or two disappointments.
So again, I think within large caps, M&M has surprised because a large part of the street was not of the belief that margins will probably come to 14%, where M&M probably produced. So that was a pleasant surprise within the large cap names. Obviously, I think within banks, HDFC Bank was a disappointment, Shelter, because I think a large part of the expectation that the markets had built up in terms of synergies, so on and so forth. They clearly got a little bit disappointed in terms of the earnings delivery that the bank probably produced. Reliance had a very stable quarter, and therefore, what Reliance is expected to do in terms of their capex terms should largely play out as far as markets are concerned. Within the broader markets, again, I think a lot of these OMCs have produced, as we just discussing, good set of numbers, and the expectation is that those numbers might very well continue for all the tailwinds that they are probably expected to go through. A few of the FMCG companies, I mean, a large part of the FMCG companies, largely disappointed on volume growth. Valuations are sky high, and therefore the markets are pegging a recovery only post monsoons. If you have a decent monsoons, Q1 will be a recovery quarter for these companies. But a large part of this market probably disappointed. And pharma did exceedingly well, in my opinion. So I think to break up sectors, capital goods continued their good show. Stocks like Siemens, Cummins, excellent set of numbers. Pharma had a very good outing to a large extent. Mid cap IT did exceedingly well. Large cap surprise with no negative surprises to that extent. And therefore, I think a few stocks within the large cap and the broader markets probably had disappointments, but a large part of the market earnings were in line or exceeded expectations.
Okay, that's as far as the entire space is concerned. But to you, Kiran, on ONGC and Oil India, how would you really look at these two particular counters today?
So coming to the ONGC first, ONGC is given a breakout on daily chart from the flag pattern, number one. Number two, if you check monthly chart or a weekly chart, the prices are trading above its high of 2016. So it's a decade breakout almost we can see on the ONGC. And looking at the daily chart as mentioned about the recent breakout, we are expecting price target of 300 plus in short term. So at current market price or any dips towards 260, 265 would be the great opportunity to enter in this particular counter. And we would like to keep a stop loss below 250. If prices is not breaking 250, then there are very high chances that we are expecting price target of 300. The 250 level is somewhere around its 200, 20 days moving average also. So for short term trading, definitely ONGC can be the good bet. We would like to highlight IOC, Indian Oil actually. If we check Indian Oil chart, it is also trading into the flag pattern only. Yesterday, we have seen a bullish reversal candlesticks pattern on recent consolidation on intraday also. The stock price has formed bullish divergence on daily chart also. So we are expecting IOC to give a fresh up move, and it would be a very sharp also. So we are expecting IOC to go long at current market price or any dips towards 180, 185 and a strict stop loss of 170. And based on this chart pattern, we are expecting price target of 220 to 230 in very short time. So NGC and IOC would be the preferred pick, but between both these things, we would like to go with IOC.
Okay, so IOC is what you would prefer in the OMC space as of now. The Nifty is settling 109 points higher at 22,020. So for sure in the pre-opening trade, we do see that 22,000 mark coming in. The Sensex 355 points higher, 72,406. So we will continue to watch out for that. In terms of the sectors that are looking positive for today, metals, realty, small caps, PSU banks, they may be in flavor as indicated by the pre-opening trade. Some of the stocks that are looking up, BPCL again could be looking at a 2% uptick. Hindalco again a 1.5% uptick. M&M, Coal India, Bajaj Finserv, LTI Mindtree could be the other movers when we see some of the other opening levels as well. Shail, anything else that you're looking at before the markets hit open?
Sakshi, I have tightened my seatbelt. I am fairly certain that next week we'll see a record high on the index, and if we are really lucky, maybe today. But let's see. Okay, ladies and gentlemen, we have opening quotes. 22,013 for you on the Nifty, 91 points higher. Nifty Bank, 160 points higher, 46,400. The Nifty IT index is the best gainer, 200 points higher at 38,222, and the 500 index is opened half a point higher. Okay, let's look at the market on the index heavyweight side. Sakshi, one good part is that all 10 index heavyweights are in the green. We'll start with Infosys, 19 rupees higher, 1695. Let's look at HDFC Bank, half a percent higher, 1420. Let's look at Reliance, flat at 2941. Okay, SBI, half a percent higher, 766.70. Let's look at Tata Motors. Okay, I think a record high, 933, 12.5%, 12 rupees 50 paise higher. How about the two private sector banks? Axis is flat, half a percent lower. Nothing is happening. ICICI Bank is half a percent higher, 1023. Nothing else worth of consequence on the index heavyweights. Okay, now we'll shift focus to FNO stocks. Sakshi, surprise, surprise. The second most active counter is PNB in the FNO space, 1.2% higher, 130. PNB will watch out. I think there's a breakout happening. BPCL 3.5% higher. BEL 1.5% higher, 188.70. And then you have the whole host of IOC, NTPC, M&M and Infosys. So fairly strong opening. Let's look at the top losers in FNO. Gujarat Gas, 5% lower, 553. This is news driven. ONGC is down, 273.90, 1.15% higher. IGL Gale, so it's the energy pack that's undergoing some kind of a profit booking. No worries there. Let's look at the top gainers in NSE 500. Okay, data patterns, 7% lower, 1980. I'm sorry, 7% higher. NBCC is almost 4.7% higher, 143.65. Bank of India 3% higher, 147.60. We have Minda Corporation 2.3% higher, 413. CRISIL 4700, 2.3% higher. The Nifty is now above 22,000 points. Kiran, coming first to you. It's a green tick across the board and a fairly strong momentum. What are the two preferred trades so far?
So as of now, looking at Nifty and Bank Nifty rally, as we mentioned also on our opening commentary, that Nifty has a fairly decent resistance of 22,000 to 22,050, and if market keeps sustaining on those levels, then we can expect a fresh rally also. Even same for the Bank Nifty. Bank Nifty has a resistance of 46,200 to 300. We can see the maximum call open interest over there also. And one more thing I want to highlight on the Bank Nifty, that 46,000 call writers are holding a maximum open interest also. So 46,000 call is the in the money for the put, and still call, and still everyone is holding so much open interest over there. So that might be the fishy. So we have to wait for at least 10 o'clock. By 10 o'clock, if Bank Nifty is sustaining above 46,200, then we can expect some short covering rally in 46,000 call, and it may lead Bank Nifty to touch 46,500 to 46,800. So at least I will wait for the Bank Nifty for 10 o'clock. Now coming to the two preferred trade, we would like to go with the cement only. JK Lakshmi Cement is performing good. The another cement we would like to go along is Ambuja Cement. Ambuja Cement is also giving a breakout from its previous consolidation. Prices has taken a very good support at 20 days moving average, and since last 7 or 8 days, prices is consolidating between 575 to 550 level. Now stock price is trading above its resistance level of 575. So Ambuja Cement can be a long candidate at current market price. Any dip or at current market price, you can go long. Keep a strict stop loss of 565, and we expect price target of somewhere around say for example 600 in a short time. So Ambuja Cement as of now we are looking.
Ambuja Cement is what you're looking at currently. Okay. Mayuresh, IT stocks taking it away today. Infosys, Wipro, LTI, Mindtree, Tech Mahindra, all showing some upticks coming in. Would you be looking at this favorably at this point?
Selectively, yes, and anybody holding on to good stocks like Persistence, as an example, I think it's moved a little bit too much for comfort. But anybody holding on a stock like a Persistent, a Coforge, an Emphasis should continue holding because a large part of the market is of the belief that as the rate cut scenario also plays out, albeit with a delayed effect as far as the US markets are concerned, it should positively work out in favor of these companies because you're not seeing demand destruction come through. You're expecting to see steady orders coming in and stable EBIT margins as execution of these orders take place. Yes, valuations are on the higher side, but in my opinion, I think mid-cap IT still continues to remain in the flavor and limelight. Within the larger names, TCS is something that investors can probably keep on their balance list.
Okay. Let me mark a few stocks that are
Sakshi,
doing
I
well.
think we need to mark a couple of stocks.
Yeah. Yes, Shail, please go ahead.
Yeah, go ahead. Go ahead.
So, BL Kashyap is what I'm looking at. 5% higher the small cap stock on the order win. Dilip Buildcon, that's up 4% in trade. Again, we had talked about the L1 order status. Bharat Dynamics is, a positive in trade, about 5% higher. HPL Electric, that's the one I spotted. I think about 8% higher in trade for this one as well. NBCC, 4.5% up right now. We're also looking at upticks coming in on IREDA as well, about 3.5% higher. From the pharma pack, it's a Glenmark Pharma. That's the one that's moving up about 4% higher in trade. A lot of momentum across the board is what we are looking at currently. Again, on Kiran, to you specifically from the PSU basket, where exactly are you keeping your eye on? A lot of stocks really doing well at this point in time too.
So in PSU basket, if we bifurcate banking sector and another PSU stock, so on banking side, as of now, we are not looking good risk reward ratio. So if anyone wants to take an aggressive bet, they can go long with the State Bank or Canara Bank or maybe Bank of Baroda. But apart from banking sector, we like IRCTC. We discussed the stocks multiple times, and recently stock has made a low of somewhere around 880, which was the previous support resistance level. Now it's become a support level. The same prices has also taken a support of 20 days moving average, and since then now it's trading at 950. So even at current market price or any dips towards 940, 930, it would be the accumulation zone only. And looking at its weekly and monthly chart, we are expecting a positional target of 1100. So for a longer time or a investment purpose, we are liking IRCTC at current market price or any dip. Go long, keep a stop loss of 880 for the target of 11.
Okay, Sakshi, now let's get marking on indices. I'd request the PCR to show the Nifty Auto Index. Sakshi, there is a blowout on that one. Needless to say that it is at a record high, and this is the third day of gains. The Nifty Auto Index at the moment is the top gainer, 1% higher, 20,191. And what's interesting, out of the 15 stocks in the index, 14 are in the green. And I'll tell you the number of new highs in the auto index. This is the interest rate cut theme that is playing out brilliantly across the spectrum. So Bajaj Auto we've discussed many times, 82, 22, 1.2% higher. TVS Motors 1.8% higher, 21, 29. These are all record highs. Maruti 11, 150, 0.5% higher. M&M 1.1% higher, 1784. It's an absolute blowout when you look at the volumes here as well. We've already seen 18% of volume transacted on Bajaj Auto, 17% on Tata Motors, 16% on TVS Motors, and it is the first 7 minutes of trade. Coming to you, Kiran, what would be your top pick?
So on on auto sector, if we are checking that all prices or all stock prices are shooting up, we are liking Mahindra and Mahindra at current market price. If you check Mahindra and Mahindra daily price chart, we are seeing prices is giving a fresh breakout from its ascending triangle pattern. Since last 2 days, we are seeing prices has given a fair upside from 1630 to 1785. So there are very high chances that today or tomorrow prices will go sideways. But in this sideways market or in this sideways movement, we would like to go long on Mahindra and Mahindra only. Say for example, there are a very good support of 1740, 1750. So that is the major accumulation zone. If any dips towards that or even at current market price, go long on Mahindra and Mahindra for the positional target of 2000. And looking at current market price or a chart pattern, we would like to keep a stop loss of 1680. So risk reward ratio is very much favorable at current market price or any dips towards 1750 would be the great opportunity to go long on Mahindra and Mahindra. Keep a stop loss of 1680 and for the price target of 2000.
Okay.
Mayuresh, coming to you, we've already discussed auto, that is a theme that's resonating with you as well. Of course, interest rates cuts in the pipeline. Within the auto ancillary space, what are the one or two stocks you think should be in the portfolio at current levels?
So one of the stocks which is looking interesting, Shelter, is Motherson Sumi Wiring. So I think if you probably look at the context in which this company operates,
Yes.
the wiring harness market is expected to grow at an exponential pace. And not just for the internal combustion engines, which means not only for the petrol and diesel variants, but they are expecting to have a strong rollout happen for the electrical mobility vehicles as well. They've already built in capacities for the same. And as orders starts flowing in, both at the domestic and the global level as well, my sense is that the kind of expertise that they probably possess, I think that can be put to good use, and they've got reasonable capacities in place to have sufficient demand that can be sufficed quite easily. Numbers have been a blowout, Shelter. So if you probably look at revenues, you look at EBITDA margins, you look at the bottom line growth, has been exceptional. And the other part of the market which should continue doing well, in my opinion, are the battery makers. There is no substitute for batteries. I think lithium-ion batteries and the technology thereof, a lot of changes, innovation is expected to happen over the next few quarters and years. But both these battery makers, Exide and Amara Raja, are putting in capacities very difficult for a new player to get into this space because you need a certain level of expertise to get into this space and a lot of capex. A lot of good companies can do capex, but they don't want to diversify into businesses that they probably don't have or they don't understand. And therefore, I think entry barriers are extremely high, and the substitution is probably a little bit more improbable as far as lithium-ion batteries are concerned and the innovation thereof. So I think both these stocks within the auto ancillary pack, in my opinion, Chelsea, can continue.
Okay, I'd just like to add a line on Motherson Sumi. Remember, this is the demerged company out of Samvardhana Motherson, the parent which was earlier known as Motherson. So if you add back 70 rupees, I think it was a 1:1 split that had happened about about a year ago. So if you add back 170 to Motherson Sumi, which is now at about 124 kinds. So Motherson Sumi is actually at a record high. So this is the limited point I wanted to make. Sakshi, yours.
Okay, let's look at the power space. Kiran, I wanted to ask you where exactly your focus is. I have been discussing this with Mayuresh quite a bit, but again, there is no let up. Coal India, NTPC, Power Grid, they're all moving up. And along with it, the name that I just said, HPL Electric, a very sharp movement on the upside. So the power equipment makers are also moving up very, very sharply. How would you be really playing this story now after it's already had its good share already in the past, but do you see more legs and which way would you head in?
So there are two parts in power sector. One is the generation company and another is the distribution company. So as of now, we are liking distribution company more on the side. But let's discuss about the generation company. So on Coal India, the prices has given a breakout from its recent consolidation. So Coal India is very much liking space at any dip towards 480, 470 would be the great place to enter into the Coal India, keep a stop loss of 450. And it's a very aggressive bet. Looking at the chart setup, we are expecting price target of 530 to 550. Another stock which we like, you also mentioned, is HPL Electric. On daily chart or even a monthly chart, we are seeing a decent breakout on HPL Electric. So at current market price, anyone would like to go long, they can go long at any dips at 340 would be the great opportunity to enter into this stock. Keep a deep stop loss of 300 or a 320, and looking at this monthly chart, we're expecting price target of 420 to 430. Now coming to the power distribution company, we like Adani Power. If you check Adani Power stock, prices is consolidation since last more than a month, and the range has become narrowing only. The upside we are seeing that 560, 570 is a steep resistance. However, every time whenever the dips come, those are the higher levels, those are the higher lows are plotting on daily chart. So clear cut ascending triangle pattern is panning out. Stock price has a very good support of 20 days and 50 days moving average. So it's a bit aggressive bet, but looking at risk reward ratio, we would like to go long on Adani Power at even a current market price or any dip at 550, 540. Keep a strict stop loss below 530. And looking at chart, we are expecting price target of 600 on Adani Power. So Adani Power, HPL Electric, and Coal India would be the preference-wise choice to invest or a trade.
Okay. So that's as far as the power space is concerned. Mayuresh, would you still be betting big on NTPC, or would you have some other names that you've added to your power stocks list?
So I think a lot of these stocks have done well. Apart from generation and distribution, I think there is a third set which is called as the power EPC companies. So I think that is where our bet is on.
Okay.
Companies like Power Make, as an example. Yes, they
Yeah,
have
you
moved
had
up.
talked about it last time too. I remember that.
But there is a good story building up here, Sakshi. I think a order book is quite substantial at 55,000 crores, and the order mix is quite good as well within power and non-power as well. So they are sufficing a lot of requirements for the power plants as well. But the two main triggers which will happen for the EPC space, one is the entire flue gas desulfurization, which is expected to get completed in the next year and 9 months by March 26. The deadline is probably going to get over. So there is a huge market size of almost a lakh and 50,000 odd crores. And very few players like Power Mech to suffice the equipment that is needed for the FGD equipments. The second aspect also that happens within this space itself, for its peers like a Techno Electric as an example, is not just into FGD but also smart meters. They are also probably getting into the substation part of the business, as well as the data center part of the business. Data center is going to be a huge aspect over the next 8 to 10 years, as we see it. And a lot of players who are going to give a complete solution in terms of data center dynamics, both in terms of setting it up, operations, and support, are going to do big time, because a lot of MNCs are going to have their back office set up in India. Apart from the MNCs, I think data center will be the core that we need in terms of our entire manufacturing process as we see it. I think the stock like Techno Electric has moved up, but I think in resonance with this theme, I think these EPC players, in my opinion, if there is any kind of a pullback, can do substantially better over the next few months.
Okay. Sakshi, I think we'll just take a small detour in the market. I want to mark a couple of stocks because now what is happening is that the momentum is building up across the broader market space. Let's look at the advanced decline ratios in three particular indices, which is the mid cap and the large cap, as also the small cap. Okay. The Nifty small cap index, Sakshi, 0.8% higher. Out of 100 shares, 74 are in the green. The Nifty mid cap index, 0.5% higher. Out of 100 shares, 73 are in the green. And I want you to hold your breath. I am now going to give you the advanced decline ratio of NSE 500. This is the broadest index we have. Out of 500, Sakshi, 387 shares are in the green. And this is what is the best part to look at, that how many, let's look at a market map for NSE 500, and a lot of interesting things I'll tell you. 7 stocks are up more than 5%. They are Rain Industries, Aegis Chemicals, Glenmark, Oil India, Data Patterns, Medant, and Natco Pharma. Okay, there are 12 stocks between 3 and 5% in terms of gains. There are many that we've talked about, and there are 369 stocks that are up between 0 and 3%. So this is the kind of breakout that we are seeing in the broader markets. We might presume that the Nifty and the Bank Nifty not doing anything, therefore the broader markets are quiet. Far from it. The rally in the broader side is phenomenal, and it's getting difficult to track all these. Sakshi.
Absolutely, and the broader markets are seeing a lot of stocks that are buzzing very sharply in trade. I'll ask you on BL Kashyap, a stock that's been moving very sharply. Kiran, do you track this stock? It's a very small ticket stock, just about 72-73 rupees odd. It's won an order worth 208 crores, and that's what is leading to this uptake coming in. But is there merit in this momentum?
So yeah, we do track VL Kashyap. If you check a monthly chart, on monthly chart, the stock prices has formed its double bottom pattern and it's given a breakout. In 2017, we have seen 63 rates. From that level, stock has crashed like anything. Now this year again, we are seeing that prices has crossed the 63-65 level. So almost a 6-7 years of breakout, and it's a double bottom pattern. Again, I'm saying this thing. So on monthly chart, the stock pattern has given a fair, decent breakout level, given a breakout. Now at current market price, anyone would like to go long, they can go long, but the stop loss is quite deep. Keep a stick 61 as a strict stop loss. And looking at monthly chart, we are expecting price target of say for example 100 and 110, but you have to give a time, say for example 8 months to at least a year. So if you are okay to invest in particular stock for than a year, then technically definitely you can go long at current market price or any dip and keep a stop loss of 61.
Okay. Mayuresh, I'm coming to you. I think, before we let you go, the pharma space is something that I'd like to discuss with you. Glenmark Pharma over in the FNO space today, 8% higher in trade. We're looking at Ipca Laboratories that's moving up. Global Health was just mentioned by Shell, that's taking it away. Metropolis Healthcare, that's another one that's moving up. Oro Pharma, we've discussed this stock also before, that's been taking away as well. How are you looking at the entire pharma space right now?
So good set of numbers, as I discussed in the mid of my commentary,
Yeah.
and a large extent in terms of both pharma and the healthcare stroke hospitality stocks have done very well in terms of numbers execution. But now I think valuations are a little bit on the higher side. The under ownership is now fairly occupied in terms of strong entry points that a lot of funds would have probably taken within this space in the last few months. And it's moving into a higher stage base, as we call it. So I think it's moving into a higher pivot zone as we see it at Market Smith India. And therefore, I think we keep on holding stocks like a Reddy and a Sun Pharma and a Cipla in our global portfolios. But I think a whole host of these stocks have done exceptionally well as far as price action is concerned. Would really wait for dips on any of these counters going forward.
Okay, so that's the pharma space. But Mayuresh, before we let you go, Paytm again, 5% downtake. What's next for this one? And of course, a lot of investors are still keen on knowing whether one should be brave enough to catch this falling knife or not at any stage that one can get into. Would you advise that, or is caution to be prevailed and we do not know where is this price headed really?
So I think that's the moot point, right? Nobody has a clue on what is going to happen next. So I think let it play out. And it's not that once everything settles down, it's going to have a runaway rally. And even if it does, I think it gives you better clarity that the worst is over in all aspects that the company is probably looking out for. So I think it's always a prudent strategy to probably let the events play out.
Right. Kiran, to you, on Paytm, how would you really look at the price changes now?
See, honestly speaking, we would like to avoid BTM as at current market level. If you check daily, monthly, or weekly, stock prices is trading its all-time low, and it is not respecting any of the low. Even though momentum indicator is in extreme oversold territory, we can expect some bounce. But we would like to wait. Let's talk to form a higher top higher bottom pattern on at least cross this previous 2 3 days high. If it is not crossing that particular high, then it is better to stay away out of the stock.
Okay, fair enough. Well, thanks a lot, Mayuresh, for being with us on this show then and sharing all your thoughts and ideas with all our viewers. Always a pleasure to host you on Business Today television, and we'll continue to keep an eye out on all the stocks that you have marked. And as always, Shail sir keeps clear record in his red book, so we will have that benchmark too. Thanks a lot, Mayuresh. I hope you have a
Thank you.
fantastic weekend ahead. What we'll do, ladies and gentlemen, is we'll take a very quick break. When we return, we will continue to have Kiran with us to discuss more stock ideas, so stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents Deep the Future in collaboration with Business Today.
Welcome back, ladies and gentlemen. The market is in fine fettle. We are at 941. The index is now slowly reclaiming its intraday highs. The Nifty now at 22,105 points higher. Remember, it's the fresh weekly expiry of the Nifty that has taken root today, and we have the Bank Nifty up about 163 points, 46,380. So this is what is happening as far as the main indices are concerned. There is a blowout on the auto index. The IT index is at 38,300, 300 points higher. The mood couldn't be better on Dalal Street. We are possibly headed towards a record high in some parts of the next week, and the stocks that are driving that are the interest rate sensitives across the board. You have a very strong move coming in the auto counters, especially M&M, fresh record high, a very strong move coming into Maruti, Bajaj Auto, TVS Motors. All four of them are at fresh record highs as far as the Nifty is concerned. And apart from that, a strong view coming into the pharma space. Sakshi.
Kiran, to you now, which are the other pockets that you're looking at positively in this, fresh move that we are looking at into the markets, and in the next leg, which are the sectors that you would be keeping a keen eye on?
So basically, we discussed two sectors since morning. One is the pharma, another is the cement, and this both sectors are doing well since opening. Now, if you're asking me third sector, then it would be the metal one. In metal sector, we have seen a sharp cut down since last week, but we can see there are some good amount of recovery also we are seeing on metal sector. In metal sector, so in metal sector, stock specific recovery are very strong. If you check Tata Steel trading at 142, which is recently its higher high. If you check, it's from the crash. Say for example, since June 2022, stock prices is trading into the is heart of high bottom pattern. The stock price is respecting is all important moving averages, and the first time stock prices has crossed its 200 days moving averages was last December 2022. Since then, prices is never retested its 200 days moving average. So looking at such long period of time, price chart on monthly or a weekly price chart is forming ascending triangle pattern also. So in metal, Tata Steel we are liking at current market price. Any dips, say for example 130, 135, it would be a great opportunity to accumulate this particular stock. Metal itself and very high beta counter, and the way dollar indexes are also moving, we can see some repercussion on commodity prices. But still, we liking metal sector because we are hearing about the rate cuts and everything. So in this space, in this scenario, the metal sector can also do well. So in metal sector, again, I'm repeating Tata Steel at current market price or any dips toward 135 would be the great opportunity. Keep a strict stop loss of 130, and we are expecting price target of 160 to 170 in upcoming at least a quarter.
Okay. So that's as far as the metal pack is concerned, where the momentum can be seen on these particular stocks. But you were mentioning pharma also, Kiran. So Glenmark Pharma is taking it away 9% higher now on that news flow. Tell us, how would you look at this stock now?
So in pharma, we are seeing that Sun Pharma, Cipla has given a very fantastic rally. Previously, Lupin and Oro Pharma has given a fantastic rally. Even Glen Pharma has given a great rally from, say, for example, 430 to 800 level. Since then, we are seeing stock prices trading into the a very narrow range or a sideways trend. The day before yesterday or maybe last week, we have seen a result on Glen Pharma, and because of that result, prices were trading at into the falling channel. But somehow during that result, the commentary was superior, and because of that, we are seeing a recovery from lower level. Now coming to the daily chart, we have prices taken support from 200 days moving average. Yesterday, we have seen prices had a resistance of 100 days moving average. Today, it opened with the gap, and now it's crossing 100, 50, and 20 days moving average. So considering a very good reversal at current market price, any dips toward 850 or 860 would be the great level to enter. Even at current market price, we can enter. But since last 2 days, it was a very high volatile sessions for the Glen. So there are chances we have to keep a stop loss very deep, somewhere around 800 or 800, 820. If prices is not breaking those levels, then we can expect again a fresh record high of 900 or 1000 rupees in upcoming time. So Glenmark at current market price or any dip, keep a stop loss of 820 for the target of 1000.
Sakshi, I think we'll mark TVS Motors. Now it is, वो कहते हैं ना आँख में खटक रहा है. Sometimes you have that small hair in your eye, and then it constantly keeps on bothering you. I haven't seen the chart of TVS Motors for a very, very long while, and it's one of the most beautiful things I've seen since morning. To you, Kiranji, what is it saying? A wonderful breakout today, and a fresh record high 2170. Maybe a new phase has started for TVS Motors.
Yes, 100%. A very good choice, of course, in auto sector. As we discussed about M&M, the same chart pattern we are seeing on TVS Motor also. A classical ascending triangle pattern. Previously, stock price has given a fantastic rally. Stock was retesting or rested at 20 and 50 days moving average, keeping a higher lows pattern intact. Had a resistance of 2100 or 2080. Now stock price is crossing those level. You can also add derivative points. You can also add volume part. Those all are giving a significant sign that this pattern is confirmed now, and we can expect a fresh record high, or we can expect a fresh range for TVS Motor. So at current market price or any dips towards 2100 would be the adding or accumulation opportunity. Keep a stop loss below 2000. And looking at this consolidation, technically we are expecting the price target of 2300 for the TVS Motor. So definitely the risk reward ratio is already 1:2. So at current market price or any dips towards 2150 would be the great opportunity to enter into the TVS Motor. A great choice, Selvi.
Okay, and the auto stocks are definitely taking it away. You know, Bajaj Auto now the top mover on the Nifty, Tata Motors, M&M, Hero Moto. If you look at the top five movers on the Nifty, at least three to four of them are from the auto pack itself, and that's the move that you're looking at. And TVS Motors, as is pointed out, is one of the strongest movers on the F&O space as well in trade today. At the auto index, record high levels, 1.6% higher, followed by moves on the healthcare pack, 0.7% of an uptick can be seen on this one, and following it closely is also the IT pack, of course led by gains in stocks like Infosys, Wipro, LTI, Mindtree, and the like as well. In the IT space, do you have any preferences right now, Kiran? And do you see some more promise coming in on the large cap IT names, now finally after the stellar show that's been seen already in the mid cap IT names?
Yes, definitely. So if you check IT, as you mentioned also, large cap and mid cap IT. So during the bad time in IT sector, the mid cap was doing fantastically good. If you check the price chart, we can see a north and south pole kind of a movement into the mid cap and the large cap. The mid cap was continuously moving high top, high bottom, whereas large cap was trading into the falling channel. Now, even after since April 2023, we are seeing the revival is coming, and the stock price, the large cap IT is also started moving into the high top, high bottom pattern. We have seen Infosys first to move in that pattern, then TCS, then HCL Tech, then etc. etc. But in during this time phase, we have seen that Wipro was underperforming a very large amount of time. If you check the daily chart price since 2022 August to December 23, stock price never able to cross its 440 level and made a multiple lows somewhere around 380, 350. Now stock price has given a breakout this year from that particular range of at least 2 years of consolidation, and since then price is trading at 520. Recently also prices has made a cup and handle pattern on daily chart. Stock price is trading above its all important moving averages. Looking at weekly and monthly chart, a big rounding bottom pattern is breakout at 440 and another level is 500. So Wipro on large cap IT sector, we are liking to go long. Any dips towards 500 or even at current market price, we can go long. Keep a strict stop loss of 470, and looking at chart, we are at least expecting 600 as a target in upcoming quarter or 2 quarter. So Wipro is the best choice for the IT large cap.
Okay. Sakshi, I'll mark another stock. Mr. Chok us just on 12th of February, and he mentioned a company called Nesco. Let's get this stock on air. I believe we'll just see a record high on this one. A very, very strong move coming in at 917 rupees. It's just about to take out its previous high of 923. We'll get into the fundamental details a little later, but Kiranji, your view on Nesco Limited, now at 917 and a volume of about 1,08,000 shares.
So Sailji, I just wanted to highlight one thing, that if you are in stock market and if you worked in Mumbai, you always remember Nesco, because it's the park where every kind of exhibition is happening on Nesco, and a very good stock fundamentally. But coming to the technical part, the stock price was trading into the a very rectangle range since last couple of 2 or 3 months. Now stock price is giving a breakout. On intraday charts, we can see a double bottom pattern breakout also. So 880 was the breakout level. Stock price is trading above that. Today's volume is also a very good volume. So at current market price or any dips toward 880, 890 would be the great opportunity to enter. Looking at the monthly chart, we are expecting price target of 1000 plus in a very short time. So a very good choice again, Nesco. We can go long, keep a stop loss below 850 and for the target of 1000 plus.
Okay.
Okay. Sakshi, Mr. Chokalingam was with us about 2 days ago, and he had mentioned this as one of his fundamental picks. I'm sure you recollect how difficult it is to get a single buy recommendation from Mr. Chokalingam, because he's so cautious in his approach and only buys deep value. So Nesco is something that even at current levels, a lot of viewers with a longer term view can look at. Remember, this is a recommendation from Mr. Chokalingam. He was with us on 14th of February, 2 days ago, and he mentioned this counter. This is a quasi real estate play, and all exhibitions that are held beyond Goregaon in Mumbai, they have a huge exhibition ground which is also now being used to put up buildings to be given on rent. With that background in mind, you can look at Nesco. Sakshi.
That's wonderful, Shail, to give us that perspective as well on Nesco. And of course, we will come in next time we see Mr. Chokalingam on air on his pick as well. Just wanted to point out, Entero listing is going to happen at 10 a.m. and the price at which it is settled, this new IPO is 12.45, which is at a discount to the issue price of 12.58. It's a healthcare services provider. We'll look at it once the markets hit 10 a.m. But it's clearly turning out to be an auto day for sure. Almost 2% now up in trade, 1.8% higher, 20,349 for the Nifty auto index. And it's across the board, two-wheelers and four-wheelers taking it away in trade as of now. We've also looked at Force Motors Shell yesterday. You looked at this stock, 5.2% higher for this one as well again today, 5,227. Again, it's on the move, and across the board we see this momentum building on. The auto ancillary pack, anything, Kiran, that strikes you? We've discussed the OEMs, but auto ancillary, what will support this kind of a move?
So in auto sector, we would like to go long on Motherson Sumi Wiring. If you check its daily chart price, stock is again placing a very good ascending triangle pattern for the longer term time. Stock has given a very much time for the consolidation. Already given a breakout from 67 level, made a high of 75 and retested its previous breakout level where 20 days moving average was the support also. Now looking at daily chart, we can see a decent bullish hidden divergence also. And at current market price, we would like to go long because the risk reward ratio is very much favorable. So Motherson Sumi Wiring is our preferred choice for the auto ancillaries sector. 70 rupees is current market price. One can go long, keep a stop loss below 64. And looking at price chart, we are expecting price target of at least 90 rupees in at least 2 to 3 months. So Motherson Sumi is our preferred choice.
Okay. All right, and it's the auto space that we will continue to keep an eye out on. How can we forget talking about PSU banks when we've been discussing all through and through this entire pack, the way it has rallied. Even if we are going to be session, we must mention that the PSU banking index continues to soar higher, and of course it's PNB that's leading the show today, 2.5% up. Bank of India, as mentioned by Mayuresh earlier, it's again soaring, 2.2% higher up in trade. Union Bank, Central Bank of India, Bank of Baroda, record high continues, 0.6% higher. Bank of Maharashtra, IOB, the entire pack. There is no let up in this space. Kiran, where would you set your eyes in the PSU banks now?
So in PSU bank, as mentioned, if you want to enter, you can enter into the Bank of Baroda, Canara Bank kind of a stocks also. Check out the Bank of Baroda daily price chart. The stock price has given a breakout from the broadening triangle pattern. The breakout took place at 265 level. Stock price is trading at 277 level. So we are expecting some good amount of short covering rally as Bank Nifty is sustaining, as we discussed also. 46, 200 and 300 was the resistance level, and now the Bank Nifty is sustaining on that particular level. So there are a good amount of chance that we can expect some good rally on Bank of Baroda also. So at current market price, you can go long on Bank of Baroda. Keep a tight stop loss of 265, and you can expect target price of 290 to 295. One more PSU bank we like, that is Punjab National Bank. Shailji already mentioned in the morning also. The stock price has given a breakout of black pattern. So one can go very aggressive long on PNB at current market price. Keep a strict stop loss of 125, and looking at that black pattern, you can at least expect 140 to 145 target in very short term. So PNB and Bank of Baroda would be the choice from PSU bank.
Okay, ladies and gentlemen, we are now at 9:57. Let's now start wrapping up the market. It's been a fantastic Friday, and we've had a gap up on the Nifty. More than 40 minutes of trade has happened, and the Nifty has retained that rally, and more importantly, it is above 22,000 points. So essentially, you have a gap up It's crossed a resistance and it has held on to that support for the last 40 minutes. That's a big plus. Across the board in the auto segment, you have a fabulous rally that's getting built into prices. In particular today, TVS Motors, it's the how should I say, the two-wheeler stocks that are now in top gear. And you have Bajaj Auto at 84.33, a very strong set of numbers that had come in about 2 quarters ago when the stock was at about 5,300. There is absolutely no stopping the counter. Today it's TVS Motors that's joined the rally along with Bajaj Auto at a fresh record high. Yesterday it was the turn of Mahindra & Mahindra to come into focus, and of course there's no stopping Maruti beyond 11,000. Beyond that, Sakshi, cement is now clicking. ACC and Ambuja at day's high 583.95 plus 2,702 across the board on ACC and Ambuja, and there is no stopping Pharma. Syngene, Divi's Lab, Aurobindo Pharma, and a cash counter called Natco Pharma. All of them are just in a fairly good shape as far as markets are concerned. The Nifty 500 index is 0.5% higher. The IT index is 0.5% higher. Mid caps and small caps. It's a Goldilocks scenario, Sakshi.
Absolutely a Goldilocks scenario. I mean, the way you look, it's a buying opportunity everywhere, I believe, in this current set of markets right here. Many thanks, Kiran, for being with us on the show and discussing a wide range of stocks with all our viewers and helping them chart their strategies in this market. Good to have you with us, and hope you have a fantastic weekend ahead. With that, both Shail and I will take your leave, ladies and gentlemen. But we will continue to track the markets for you on Business Today television, so do stay tuned. A lot of action follows up next on your screens as well.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
इस मंदिर ने हमारे प्राचीन रिश्तों में नई सांस्कृतिक ऊर्जा भर दी है। साथियों, अबू धाबी का ये विशाल मंदिर केवल